I always start with our market update. Today's market update, we want to showcase a couple of numbers. These numbers we've been looking at all year long. Total sales, we look at the change so far this November. We're 3 weeks into November now, almost getting towards the end. And sales are up 6% over last year, which is really remarkable considering you look at the other bigger cities in in Canada, you look at Vancouver, you look at Toronto, their sales are actually plummeting. The total sales volume is plummeting. We see that as a reflection of the price. Their average price is so high there that when the interest rates went up, it just kicked a lot of people right out of the market. They just couldn't even afford these things. Calgary's average price is still very, very affordable. If you look at it on here, it's at $534,000. That's across all property types, so condos, apartments, townhouses, and single-family homes. It's very affordable, and it's part of the reason why we're seeing all this immigration or all this migration from other parts of Canada to come to Calgary. We actually have clients that have owned in Ontario. They quit their jobs, sold their homes, moved over here, bought their house for cash, and got an equivalent type job here in Calgary. And they put tons and tons of money in their pocket, and they own their home outright.
Yeah, and so everyone always asks us, where should the market, or where is it going? Have I missed the boat? Is it too late? Well, we can tell you, we've been saying it for years, that we feel that the average should be around $650,000. So we're nowhere near that. Where do we get that number? Tim and I were at a CMHC breakfast meeting 2 weeks ago, and Toronto's average, what was it, Tim? It was like 1.2 or something like that.
Just over 1.2.
1.2. And Calgary has never been so far apart in value compared to Toronto than right now. So we're less than half. And we even think the $650,000 where Calgary's heading to, it's not going to stop there. It's going to just continue just because of the population. And that's the difference right now. What's driving the market isn't oil and gas for the first time. It's a population boom. It's rumored to have 75 people moving to Calgary every day. And we're seeing it out there, especially in the rental market. There are no rentals out there. So for landlords, we always say don't gouge your tenants on jacking up the rents, but the rents have gone through the roof. And they have to, because the landlord's costs have gone through the roof as well. People's mortgages have almost doubled. And then if you own a condo, insurance rates have gone up. Condo fees overall have gone up. So we're seeing rents that have, a 2-bedroom condo that once rented for $1,300 now on average renting for $2,000. So is there room to make money in this market? Of course there is. What the numbers aren't showing right now is that there's sectors of the market that are really booming, and that is prices under $500,000. And why is that booming? It's simple. It's because the rental rates have gone up so much that it's almost cheap enough or the same price to actually own when you cross-reference renting versus buying. And in return, what we're seeing is that the condo market's gone up 9% this year, and the townhouse market has gone up 17%. So, the reason being, Tim, is that all of the single-family homes or the attached homes have gone up as well.
Yeah, and everybody got bumped down a housing type when the rates went up. They could qualify for a $500,000 home before. Well, now the average price is $534,000, so that bumps people down a property type, and it goes all the way down the line. And there's always more buyers out there for the cheaper classifications of homes. So there's going to be more competition for those lower priced homes, the apartments and the townhouses, and that's driving that sector of the market. One thing, another couple of numbers I want you to look at is the new listings. They're finally starting to grow. You look at it, it's this month, November is up 37% over November of 2022. But the number we really look at is active listings, and we're still behind last year. We're at 3,200. It was 3,500 last November. So we need those new listings to keep coming on and coming on. And when we reach, what's a balanced market in Calgary? Probably 5,500, 6,000 listings. So we're still half of what we should be at to have a balance between buyers and sellers, balanced market in Calgary.
Yeah, so those active listings, they're basically it's just not enough. When we go into communities, we may have 3 or 4 properties in that community to choose from. What does a balanced market look like? Tim and I could tell you that when we do have a balanced market, we normally have 6 or 7 properties to choose from. And out of that 6 or 7 within a quadrant of a city, of the city, we would narrow it down to 3 or 4 properties. And then we'd go out and show those properties. And when we show properties, we lead with education. We don't sell. We run the numbers so our clients can actually see the performance of that property. And then we work out the quality of the property. Is it going to be a money pit? And then what is the rentability of the property? Are you going to have tenants lined up? We take all that risk on as investment-focused realtors, so our clients fully understand that they're getting a property and not have to stress about it. So we take that away from our clients, and right now, when we're going to see a property, we're actually waiting on a property to come on the market. So instead of having 7 on the market, then 3 to choose from, and then go show those 3 and then choose one, right now we're waiting for the property to come on the market. And when it comes on the market, there may be 30 other realtors showing it, and then there may be 10 to 11 offers on that same property. So we're actually in a time right now where we're actually cutting our clients off because we're competing against homeowners out there. And Tim, you were saying this the other day, when we go and show properties, it's not just investors looking at properties, it's homeowners. And some homeowners have extended families. So if it's a suited property, they're going to pay extra for that property. Tim was just showing me a property in the Northeast that had 8 bedrooms. So I think that's an extended family.
Yeah, we're starting to see multi-generational families living together. I'm sure everybody's read about it, but we're actually seeing it in the marketplace. We're seeing new builders build purpose-built homes with like 5 bedrooms upstairs, 2 on the main and 3 in the basement, 2 kitchens, 1 up, 1 down, and tons of bathrooms because they have multi-generational families all moving in together. And when you look at it, there could be 6 employed people in that family, maybe some parents and brother and sister who are both married and they have kids, and that's 6 people on 1 mortgage. So it's very, very economical for them. And if you don't mind living with all your whole family, then it's an economical way to live. And we're seeing that right now.
Yeah. One last thing on this market update, why we are confident on why prices will continue upwards, is because they won't be able to catch up with the supply and demand issue. They're not building enough properties right now. Not only that, the cost of financing these builds has gone through the roof. So developers are actually taking a back seat right now. And if they are building, they're building rental purpose apartment buildings. That's mainly what's going up right now. So it's not going to, what do you say, Tim? It's not going to help our situation.
Yeah, we're not going to get tons and tons of supply right away. There's so many factors against that. We've gone into it in other seminars about the costs, the taxes, the municipal government that's anti-development, even though they say they are. So there's so many things that are putting the brakes on new development in all over Canada, not just in Calgary, that we're so far behind in new house builds compared to the population growth that we're going to be in this predicament for a long time. But in that being said, we still find good cash flowing properties for our clients in every housing type, whether it's a single family home, whether it's a condo. We find the ones that cash flow because our investors need to cash flow. We can't have our clients in a negative cash flow position, because once you start dipping into your back pocket to finance that property, then it really sours you on the process.
Yeah, for sure.
Okay, so our next slide is about our real estate investment mortgage broker, Danielle DeMarco. She had a family emergency today, so she won't be on the call, but we will still sing her praises. What she does is she develops a real estate investment plan for all of our clients. She doesn't just get you a mortgage and then say, okay, I'm done, you've got your mortgage. She places that mortgage on a property with an eye to the next property. So you have to put the right mortgage product on a rental property if you're going to buy another one, either in the near future or way down the road. You don't want that mortgage to hinder your prospects if you want to acquire many, many properties.
Yeah, and sometimes we actually, when we meet with our clients and they're buying their first property, sometimes buying a smaller property to start off with is beneficial. So we've actually had to tell people that have come into our office and spoke to Danielle that they can qualify for 600,000-700,000, but actually take a few steps back and buy them a townhouse for 300,000, knowing that that property will become a rental property and then moving into something bigger and then something bigger after that. So there's a lot of planning that goes into this, but if you are thinking of becoming a real estate investor, we always say this, even though tonight's topic is all about buying properties without qualifying, you should always find out exactly where you're at. And the reason why we say that is because it's always beneficial if you can do it on your own at the beginning. If you can't get a mortgage, well, there's these alternative investment strategies, which one of them we're talking to tonight. But there's other ways. Tim, we've bought multiple properties through joint ventures, through raising capital. If we have an investor that's working with us that wants to move forward, if you've read our book, Fearless Real Estate, Tim and I are the authors of two books. One is called 1 Million Reasons to Buy Real Estate, and the other is Fearless Real Estate. If you've read this book, you'll understand that even if you can't get a mortgage or you don't have the finances to raise a deposit, we don't take no for an answer. So, but the first step is always to see where you're at. Doesn't matter if it's bad or good, talk to Danielle, and then we move forward from there.